Today is February 15th, 2017. This is PXD. I've entered short. I've entered short at 198.97. My risk was 199.12. My entry was 198.97. This shows a reward of 3 at about 198.53. We've already reached that. I'm going to monitor the stock for further weakness or signs of strength, stalling, hesitation. And if I need to, I'll tighten up my stop. I usually start out with a soft stop, and as soon as I'm able, I have a lot of other orders going on. I try to get in a hard stop that I use as an emergency stop. Normally it would probably be up here, just above the swing high. But because the stock's already moved in my favor, I go ahead and set my emergency stop at break even. I usually watch multiple charts, multiple time frames. I first became aware of this trade by looking at the 60-minute chart. I noticed here on this day it had a new high negative reversal on the 60-minute chart, found support at the 20 and came back up and started to show weakness just prior to this new high, which has become resistance. Also the MACD, I don't usually use a MACD crossover as an entry signal or trigger, but I do use it to gauge the momentum, and clearly the MACD line was flattening out. The negative space, which is this space inside, is clearly getting smaller, showing obvious signs that momentum was waning. Today we also there was data about crude oil. It had a build beyond expectations in supplies. That's usually not a good thing. Crude oil did manage to rally, but initially. But since then has pulled back a little bit. Also, I encourage everyone to keep a little journal with observed time tendencies. I've noticed that around 8 a.m. Pacific time, stocks tend to pull back or revert to the mean. Those that are up tend to go down, and those that have been down tend to bounce up. That doesn't apply to stocks that are in an extremely strong up or down trend. After I identified an opportunity on the 60-minute chart, I drilled down to the 10-minute chart just to get a closer view and see what was going on. We definitely had a small uptrend here, and then it broke the trend line, tried to get back above it, was unable to, sign of weakness, unable to stay above it. Then I drilled down to the 3-minute chart. When I looked at this 3-minute chart prior to entry, it looked a little chaotic. A pretty obvious double top, but I found it difficult to identify a good low-risk entry, so I shifted down to the 1-minute chart and was able to find, a very clear, smooth trending line that had been broken right here. And I was also able to identify a nice horizontal consolidation area. This had been broken. I was a little late getting into this trade. And then this second area, horizontal consolidation area, was broken with a wide range bar, very definitive. These are all kind of small. Got some tails and horns. And it could have really gone either way, but this is a definitive bar down or candle down. And so I went ahead and entered. Also, some other clues, on the 1 minute chart, you see that the 5 EMA, which is the green line, is rounding down. The 15 EMA is also flattening out. And you look at the MACD and it shows pretty clearly downsloping lines, lots of negative space, that a crossover is imminent. So after you enter, it just becomes a matter of trade management, adjusting your stops. And I have a choice to make. Do I lock in the profit, or do I see if there's another run or leg down? It's not uncommon for stocks to check back or pull back to create an initial trend line. So under normal circumstances, I wouldn't be alarmed to see it come up to this trend line, or even overshoot a little bit to shake out some traders. You always want to be asking yourself a couple of critical questions. Where should a stock not go if it's supposedly weak? And where should it go if it is weak? A weak stock should be showing price weakness as it enters a trend line or a prior area of resistance. There's a lot of noise on a 1 minute chart. It's great for scalping. It's great for using it as an early warning. It's great to decipher trend candles from the 3 minute chart through Candle Edition. They're not that great at determining longer term trends, especially if the trend isn't very powerful, or if the trend doesn't have a lot of momentum or a lot of volume. So I think this is a definite area. I don't like what I see here. My stop is at break even, so I don't really have anything to lose at this point other than a small amount of profit that I've gained. 20 cents a share. Because I'm already at break even, I can be more patient. I can give it a little room to run. And that's exactly what it was, a little shakeout. So I'm going to go ahead and split my order. Into 2 separate stops. I don't mind a stock moving against me once, but I certainly don't want it to move against me twice or further than the first time. So I've ratcheted half of my position down to just about 1 cent, 1 or 2 cents above here, this minor swing high. Notice on the 3 minute chart, this is such a wide range bar to the downside. That's really showing some weakness. Now we have a check back 0, the initial check back, and that creates a trend line. And so as this stock is making its way downward, I might expect to see it check back 1 or 2 more times. If it starts to check back too much, that shows some buying interest, and I'll need to manage my trade a little more actively and a little more aggressively. I'm going to go ahead and bring this half this position down to my reward of 3. I'm locking that in. Keep in mind that these are emergency stops for the most part. I can exit this trade anytime I want. Should I see something that flashes a serious enough warning sign. We look at the 3-minute chart and we see that price is approaching a recent swing low area here and here. Now that could act as support, so I'm interested in seeing how price behaves around this area. Still have some downward sloping MACD lines, some negative space. This is a little funky, this MACD on the 3-minute chart. So I'm going to just kind of watch it and pay attention. So this area and this area are both potential places that price could catch support. The purple line is the VWAP, the volume weighted average price. It's already broken below that, hinting or suggesting a bearish bias. I'm going to go ahead and take what was at break even and bring it down to the 1 minute 20 EMA. So now I'm at about a plus 3R and a plus 5R on my stops. Can change that to 5, see where we're at. Oh well, looks like it might be a plus 6R. There we go, plus 6R. Something I want to keep my eye on also is possible exhaustion moves. This stock has a lot of volatility in it this morning. You see these nice wide solid bars. Real sign of weakness. When you start to get in these smaller bars, that's showing you that momentum might be waning. NinjaTrader 8 has this lovely feature where you can attach a trailing stop to any indicator that's on the chart. So you can also offset it by a number of ticks. I think I'm going to go ahead and put this first stop on the 5 EMA, and I'll offset it by 3 ticks. So I've got a really tight one, and I've also got one at a reward of 6. Let's figure out what this current reward is at. I'm going to guess maybe 10. Oh, a little bit more. So 11 plus 11R. There we go. So it's plus 11R at the stop that's attached to the 5 EMA. I'm going to bring this other one down to the 20. Keep that on manual for now in case there's a quick price movement and I need to make a fast adjustment. Take this moment to talk about position size. If you get stressed out because of a little movement against you, like this, then that's an indication that your position size is too large. You should be feeling calm, and your mental frameworks should be in a strategic frame of mind. If you're feeling fear of missing out or fear of loss, first of all, that's not a good place to trade from. You're not going to be resourceful. You're not going to make good decisions. It's going to be very hard to manage a trade rationally and profitably. The flip side of that is if you feel total indifference, you might not be attentive. You might not give a significant weight to moves that are moving against you. That might be the beginning of a more serious reversal. It's very important to feel very balanced. All right, we got taken out the first one, and I'm okay with that at plus 10R, whatever it was. 11R. Yeah, just a little bit more than 11R. Might have been about 12R. And notice, where did price bounce up? It bounced up at this prior swing low area that was going to be a potential support. And notice the change in character in the price candles. Went from these strong downside candles to suddenly smaller candles. Smaller and smaller and smaller till you got to a doji. On the plus side for this trade, I would say that the downward sloping MACD with negative space on both the 1 minute and the 3 minute chart definitely suggests a bearish bias is still in play. So I've already locked in some gains. Now it's just personal choice. Do I want to give the trade some room to run, or do I want to go ahead and lock in my profits? I also want to pay attention to what time it is. It's 8:30, and I happen to know from experience and close observation that a lot of times around 8:30 stocks will again revert or reverse direction. So I'm going to take that final 500 shares, bring it down to the 20 EMA on the 1 minute chart, and lock in more profit should the price move against me further. 3 minute chart, you can see this long horn right here. They're shadows technically, but it's so much easier to say tail or horn than upper shadow, lower shadow. These upper horns suggest selling pressure. These dojis suggest hesitation or indecision. A lot of people say, well, why take partial profits, Heather? It can still keep going. The thing about trading is you really don't know what price is going to do. You can learn to identify probabilities, and you can learn to improve your timing, but really you have to keep in mind that price can do anything at any moment. An unexpected terrorist event could happen, a weather catastrophe. Anything's possible. Economic data could come out. There could be a press release that has something to do with oil that could dramatically affect how price might move. Or it could simply be a large institutional buyer who's decided that this is a value area and they want to purchase some stock. Whenever you get into a trade, it's always wise to take the big picture into account. What's moving the market today? What's the bias today? Is it bullish, bearish? What's the market's biggest concern today? What's driving the market? Is it good or unexpected news? Is it negative news? Is it fear and uncertainty? Also, you want to consider the trend context or the market context of the stock you're trading. Has it been in an uptrend or a downtrend, or has it been sideways? You want to pay attention to multiple time frames to try to get an accurate picture. Long term, intermediate term, short term. What kind of trend structure do you have? There's many common types of trend structure. And one example would be a parabolic trend versus a slow and steady trend. A wavy trend with multiple checkbacks to the trend line versus, say, a boxy trend where the pullbacks are very shallow or practically non-existent. Instead of a pullback, you have a lateral consolidation. You also need to consider the strength and weakness of price action, actually taking the time to learn what these candles mean. You also want to be able to identify bases or patterns or micro patterns. A pattern would be like a double top or double bottom, or a cup with handle. Maybe you see a cup with handle base forming on a daily chart. Micros would be an example of that, would be dojis or a 2-bar reversal pattern. So I don't like the stalling that I see here. I'm going to go ahead and bring this down. Is it possible I'll get knocked out? Sure. Is it possible the stock could continue on without me? Absolutely. Whenever you make decisions based on support and resistance, you always improve your probability. Other things you might want to consider while you're looking at the chart or evaluating a trade is, what are your specific plays and triggers? Have you observed some common time tendencies that might indicate whether a stock's likely to pull back at any given time or not? Notice my stop, which also coincides with a reward of plus 11, and just a little bit above where we got knocked out when our first stop was attached to the 5 EMA. It's now a swing high on a 1-minute chart, and it's also very close to the 20. So there's a lot of things to consider. The big picture, the market context of the trend structure, the price action, the bases, patterns, micros, your specific plays, your triggers, time tendencies. Another thing that can be incredibly valuable exercise is to compare what you anticipated. What was your hypothesis about the stock? What did you anticipate price action would do? And then compare it to what actually happened. Also pay attention to what contradictions or caveats did you notice. It's very important to actively look for contrary information. Did price do exactly what you thought it would do? Did it do it in the amount of time you thought it would? You can actually rate your performance at anticipating, rate your ability to create an accurate hypothesis about price movement. And if it's completely off, then what did you miss? Were there some clues? Were there signs on the chart that might have indicated that your assumptions were incorrect? Were there any caveats or contradictions? Everyone should have a list of critical questions that they ask themselves before and during a trade. Having a list of questions is just a simple and easy heuristic to make sure that you're factoring in the importance of context in your trading. You also want to have questions that revolve around risk management. You should never just jump into a trade. You always want to make sure that you've addressed potential risks that exist and that you've gone out of your way to mitigate and control those risks. Here's an example of some of the things that I consider when controlling risk. I try to make sure that my trade, my entry, my setup is a low risk, high probability setup. I try to make sure that I can get in at a place where my distance to wrong is the smallest possible. I try to get in at places where I can put a logical stop, a well-defined stop, well-defined risk, instead of just some arbitrary percentage place. And then I also want to make sure that there's reasonable risk-reward in the trade. I can have a low-risk trade with small risk and a well-defined risk. And if there's not enough reward in it, then it's not worth taking. So the whole time what we're watching a trade, the main thing that we're interested in is catching trends. If you do a position trade, you want to catch a trend that lasts, several days, weeks, or months, maybe even years. Doing swing trades, you want to catch a trade that is lasting 3 days to 3 weeks. When you're day trading, if you can catch a trend that lasts an hour and a half to 2 hours, that's pretty outstanding. Since we're concerned with trends, the main thing that we're trying to focus on in evaluating the strength and weakness of price action is the trend likely to continue, or is it more likely to reverse? Who's in control here, the bulls or the bears? Also consider how far, how fast has price moved. What's the normal ATR for this stock? Have we reached it? These are all things you need to be aware of. You also need to consider the spread. Some stocks have an incredibly large spread, so you're immediately at a loss the minute you enter a stock. Making sure you get into stocks that have sufficient liquidity usually means the spread will be small. So you always look left of the chart. What has the trend been? Who's been in control? How far, how fast has price moved? Where should price go? Where should it not go in a strong downtrend in this case? Consider areas of support and resistance on multiple time frames. Consider swing highs and lows. Is the trend more likely to continue or reverse? How do we know that? Well, by looking at the price action, by looking at patterns and bases and micros. And another really important thing to consider about a trade that tangles up quite a few people is being aware of what you want out of a trade versus what the market's willing to give. A lot of times people stay in a trade a lot longer than they should because they want more. But the bottom line is you have to have gratitude for what the market's willing to give you. And if you become determined and stubborn to get more, 9 times out of 10 you're going to lose money. The flip side of that is choking the trade and being so afraid of giving back profit that you don't actually let the trade move in your favor. So again, it all goes back to being in a good place psychologically, feeling calm, feeling patient, feeling strategic, knowing when to be patient based on price action, knowing when to be aggressive with your stops based on price action. And one quick thought about profit targets. Some people love profit targets and they do very well, and there's certainly nothing wrong with it. I personally don't like profit targets and focusing on the money or focusing on a specific area because I think it can really blind the trader to the price strength and weakness that's on the chart. It just subtly shifts your attention from trading well and reading price action correctly to, in a sense, holding out for an arbitrary profit target. In other words, what you want. And that just may not be reached because the market may not be willing to give that. Now, that doesn't mean that I don't pay attention to risk reward or where my risk reward is in a trade. As you can tell, I've done that throughout the entire trade, always trying to make sure I have a rough idea as to where the reward is. So price is starting to move down a little bit. I'm going to go ahead and tighten my stop about halfway for now between where it was and where price is, which puts it a few ticks above the 20 EMA on the 1 minute chart. The fact that it dropped and then was immediately followed with a green candle doesn't inspire a lot of confidence about the strength of the down move at this point. I do like the horn on the top. It showed that sellers were able to push it back down, but I like to see more definitive follow through. About profit targets, if you do have an expectation on what you'd like your profit target to be, it's very, very important that you're flexible and you're fluid because price is dynamic and it just might not reach the area you want. And sometimes close is good enough. For example, I know many traders that like to get a 20% return on their position trades. Novice traders, if it gets to 19% and then starts to move against them, instead of going ahead and locking in profit because it was close enough, they'll hold out and then they'll watch their profits cycle into a loss. Ultimately, the only person you're trading against is yourself, against your psychology, against your weaknesses, against your skills, Always work to improve your education and your knowledge and your skills and your timing and your ability to see and evaluate opportunities accurately. So this price action is not suggesting weakness, at least on the 3-minute chart. It looks like we have a little reversal bar happening, and it's not uncommon for price to overshoot a resistance or a support area just a little bit, just enough to sucker in a few novice traders and get them trapped, and then bounce up and recover. We've still got a tremendous amount of negative space between the MACD slopes on the 3-minute chart, and they're still both sloping down. That's the kind of information that would allow me to be more patient with the trade. For example, instead of going half the distance, I might have tightened it up all the way to the 20 EMA, and in that case I would have been knocked out. Patience can pay off, but it has to be strategic patience. It has to be intelligent patience. It can't just be hopeful patience. If you ever find yourself hoping or fearing, then you know you're not in a good place psychologically to trade at your best. Another thing to consider is, where might I add back the position I sold? It's very important that you have a thoughtful and detailed trading plan for each and every trade that you make. That means clear if-then statements. If price does this, then I will do that. If it finds support here, I will tighten my stop to this location or that location. I'm starting to feel more positive about this downtrend. Another thing you want to keep an eye on is trend line acceleration. I can draw a new trend line as it moves into new lows. It shows me the strength of this downtrend is increased. One of the reasons I would draw a new trend line is to help me lock in profits and not let it move too far against me, just by being aware and keeping track of the strength of the trend. Also, if you have too much downside acceleration, or it's too fast or too extreme, it often signals the end of the move. It's important to pay attention to that. I would like to see more of a waterfall action, or really letting go. Notice the tempo's really slowed down. It's still moving down, kind of it's very slow, not as decisive as it was. You can just look at this price right here. That's clear, strong move, sideways, indecision, and then just kind of bouncing around. I'm going to go ahead and tighten up my stop. Plus 13R. It's a little bit above the swing low on the 1-minute chart, and a little, about 4 or 5 ticks above the 5 EMA. Got this candle. It's crossing the trend line. It has a tail showing there was some buying pressure. The main thing that I'm trying to do is minimize my in-trade drawdown, minimize the profit I give back, while maximizing my opportunity to participate in another leg down. But so far, it's gone about 3 points. So some things you want to consider when evaluating your performance, which is, your analysis to taking action to executing the trade, is your focus, your position size. Are you focused? Are you tired? Are you fatigued? Was your position size too large or too small? How was your entry and exit timing? How was the timing of your stop management? Did you tighten too soon or too late? How was your execution? Did you execute the trade correctly and mistake-free? You should constantly be working towards flawless precision according to your trading plan and your strategies. So you can see Price is getting very, very close to our stop. Just almost triggered 2 candles prior. While the trade's progressing, especially when action is dull, you can make entries in your journals, your trade journals, or log the trade in whatever trade tracking software or format you use. Make notes about your psychology and your timing and performance. The main goal is to analyze, record, and improve your trading. Everybody should have a trade journal. So right about now I'm starting to focus on how much I'm giving back. And it's moved against me once and twice. So I might be more inclined now to, if it moves down, ratchet my stop down more aggressively and tightly, given the opportunity. Once, twice, almost 3 times. Normally I wouldn't let that happen, but sometimes when I'm recording these videos I get a little distracted and my focus isn't as intense as it usually is. Starting to see some signs that the momentum to the downside is waning. Lots of tails across the shorter term trend line, and our order is hit. So we're knocked out of the trade. And I think it's a little late. After 1, 2 moves against me, I'm already critiquing my trade. Normally, after it moves against me twice, I would have ratcheted my stop down even further to the 20 EMA here, and we would have been correctly knocked out at about this location as opposed to this location. But that's okay. Still walked away with 11 and 13R, I believe, yes. So overall, pretty good trade. Just because the trade's over doesn't mean that I'm done. I have a decision to make. Will I get long? Or will I wait for price to possibly check back to this longer term trend line, providing me another low risk opportunity to get in and short? So I'd want to be watching for strength or weakness as it approaches this trend line, which can act as resistance. I hope you find some of this information useful. Good fills, everyone.